Hey traders and investors, Serge Berger here. I just made a very highly profitable and high probability trade in the Russell 2000, and I want to show you guys how I went about it and how you can definitely do this as well. So what we're looking at here is the Russell 2000 on a 15-minute chart. So each bar here is 15 minutes. And by the way, this trade will work just as fine on daily charts, on weekly charts, on 5-minute charts. It doesn't really matter what time frame. I want to show you the methodology I use to go after this, which is really talking about these confluence support and resistance zones that I always discuss. So we have here is a Russell 2000, as I said, and basically we have a bit of a concerning topping formation for the near term that took place with a high here, then a higher high, albeit not by much so, and a lower high, basically giving us what we could look at as classically a head and shoulders top, right, or at least for a trade. So the neckline then classically becomes, I'm going to just kind of draw it here so we don't have to squint too much. I'm just going to go with this, and you can see essentially what happened so far is the index gap lower and my price target was hit. But how did I get to the price target and what other things did I use? So the confluence resistance area that I have is made up of a Fibonacci retracement area. So I took the top here and I measured it down to the neckline, okay? And you can see that the ETF, the IWM, so the Russell 2000 ETF in this case, retraced exactly 50%, or just almost exactly 50%. A little bit more, but I mean it's very close. And so the logical move then from here, once we have confirmation, and we did have confirmation on a 15-minute bar, the stock then has a downside target. How do we get to the downside target? Well, we use something called a Fibonacci extension tool. And again, if you're not intraday trading, and this was not a day trade, by the way, this is something I held overnight. Don't worry about it. You can do this on daily charts and weekly charts. This works out for the long-term things as well. But essentially, you had a pullback, and then I measured a Fibonacci extension. So I took this next tool here and clicked the top, clicked the bottom end here, and then clicked again. We got a 23.6%. I'm trying to squint here. Extension was somewhere just around here. So around 1650 or so was the price target. We actually exceeded it right at the open, so I was quite happy to take profits here right as the market opened. So the confluence resistance area was made up of a 61.8% Fibonacci retracement, so a very classical Fibonacci retracement level, a head and shoulders top, and we had this neckline of the formation as a reference to draw the line. And then, of course, the 23.6% Fibonacci extension. So very high probability trade. And you saw also classically what tends to happen is the more weight or the more often a support line gets tested, the more severe the breakdown below it. In this case, you had 1, 2, 3, 4, 5, 6, or 7 or more attempts at breaking below this line. None of them actually did so until the last one, and you can see it was a very forceful breakdown. So I hope this makes sense. Please like the video, subscribe to the channel, and I'll see you in the next video.